Uh, Dear colleagues, we just got to the session number 3, and we thought that it was a good idea. First of all, after an overview on the session 1, on the second will be, of course, has been the announcement of the Strategic Intangibles Initiative and the description of the work. And then when we get to the real world, so to speak, we thought it was a good idea to have policymakers, starting from policymakers and securities regulators. So it's a great pleasure for us to announce the speakers here in this session that are Ioanna Michailidi, that takes the place of Sven Gentner. Sven, unfortunately, has been called upon the Director General. We all have bosses. That's something in life. We all have bosses. So Ioanna will be giving us an overview about European Commission and the work and the ideas of European Commission in this field. We are very, very happy then to have Isabelle Groer-Gaynor avec nous, with us. Thank you, Isabelle. We can see you very well here in the room. From ESMA. ESMA, as you know, is the European Stock Exchange regulator. And of course, he has a decisive role in Europe for all this information from companies to the market. And last but not least, we are particularly honored to have with us Koichiro Kuramochi. Kuramochi-san is the Chief Accountant of the Financial Services Authority of Japan. So we have ESMA, we have Financial Services Authority, we have European Commission. Before starting, let me say also that we would like to thank also 2 important representatives of the Ministry of Economy and Industry of Italy. So thank you for being here. As to give the full picture of, we are very well represented today in terms of policymakers and securities regulators. So thank you very much. And without any further ado, I give the word to Ioanna, and thank you for jumping in last minute, bold and courageous. And thank you, and I leave you the floor. I think that you don't have slides. I think you're just talking.
Yeah.
Thank you very much.
I will be very brief. First of all, I would like to extend my thank you for the invitation extended to the European Commission, and apologies really from Sven. I will be giving you the overview from the policy perspective on this topic, particularly at the moment where digitalization and emerging technologies are reshaping the role of intangibles. So this topic is becoming more and more important throughout the years. Of course, it's nothing new, but the prevalence is becoming bigger and bigger. So we see that intangible assets such as data, software, intellectual property are becoming central to Europe's competitiveness and to the growth of our SMEs, which are the backbone of our economy. And it is very clear, it has become very clear from the startup and scale-up strategy that was brought forward by the European Commission, that it's a priority to support innovative firms. And this is part of the broader agenda of enhancing competitiveness, growth, and financing opportunity, particularly for SMEs and startups. Although we are not on the lead on this project, I will try to give you an overview on where we stand in this initiative. And we can share with you that the public consultation on the European Innovation Act has ended back in October. And based on the public consultation results and the impact assessment that is currently ongoing, the Commission is expected to put forward a proposal with concrete measures in early 2026. So from the accounting side, because I come from the financial reporting side, what we see as a key challenge is that many companies, particularly those that are IP intensive, are not able to reflect the real value and their potential in their financial statements. So what we see is that under the current accounting rules, both at the national GAAP level as well as based on IFRS accounting standards. Most internally generated intangibles cannot be recognized on the balance sheet. And as a consequence, we see that the significant value of those intangibles remain off balance sheet, which limit our startups and SMEs visibility of their full economic potential. So in addition to that, we often hear that SMEs lack the resources and expertise to carry out complex valuations or being able to document their intangible assets to meet the recognition criteria under the existing accounting rules. And with that in mind, I would like to share with you that the European Union Intellectual Property Office is currently looking into developing an IP valuation framework. I cannot promise that this will go forward. They are now exploring this. And we are in very close cooperation with them. We are currently monitoring their work on this aspect. And this is particularly important if you think about the lack of a common framework in the EU for the valuation of intangible assets. At the same time, we are closely monitoring what the ISB and EFRAG are doing on their end in the context of the IS 38 Intangible Assets Research Project. And we are looking forward to see how this will go forward. So this comes to the end of my intervention. Thank you very much. And now I'll give the floor back to you.
Thank you, Joanna. Personally, I was quite struck by the fact that the European Intellectual Property Office is developing a framework for valuation of intangibles, which is just looking around. There's some people involved in the valuation of intellectual property here. It's something that I didn't know personally, and I think it's an important piece of news for the evolution in this respect. Joanna, thank you very much. Now we give the floor, and we're very happy to give the floor to Isabel, that I have always the pleasure to share some meetings with her and ESMA, at least twice a year, I think. And so Isabel, thank you so much for being here. It's a very prestigious, and we are very honored by your presence. So the floor is yours from the ESMA perspective. Thank you.
Thank you very much. And can I check that you can hear me well?
Perfect.
Okay, great. So thank you very much for the invitation. And I really apologize that I'm not able to be with you in person, but I did have prior engagement commitments in Paris. So I'm still happy that I'm able to join remotely. Before I start, maybe I just want to recollect what ESMA's role is here. So as you know, in the EU, it is the national competent authorities that actually carry out the enforcement of IFRS financial statements and of sustainability statements. And we at ESMA, what we do is we promote the consistent application of IFRS across the EU, which particularly means that we discuss cases, that we try to get common views on various issues. And I can tell you that intangible assets under IS 38 are a recurring focus, and that's due to the complexity at all levels in recognition, in measurement, and in disclosure. So the way we address this is through enforcement decisions, some of which that we publish, European Common Enforcement Priorities, which we publish on an annual basis, thematic statements and reports, and comment letters, discussions with the ISB and with EFRAG, where we sit as observers in both sides of EFRAG, in the TEG and in the board. So I'm going to be illustrating, first of all, some issues key issues that we've identified, and then what we're doing in terms of actions and what our recommendations have been to the ISB. So in terms of the key issues identified by ESMA, so first of all, it's an old standard, and there have been over the years a significant number of cases that were discussed in our financial reporting group. And the accounting issues that are discussed often relate to the recognition of development costs, so the famous development versus research. At what point do you get into development, and can you actually capitalize? The determination of useful life for monetization purposes, the assessment of control over an asset, and all of these areas imply a high level of judgment. And I think the most if I could say, popular industries that this comes up in mainly has been the pharmaceutical industries, and particularly in the wake of COVID-19 with the development of vaccines, we had these issues. The telecom, media, entertainment industry, the software industry, and last but not least, but maybe more amusingly, the football players. And we published several decisions, in fact, 8, and most recently these were related to the recognition of development costs, the assessment of control, and the reliability of fair value in an exchange transaction. This was in relation to the football player contracts, and tackled to which extent some intangibles are so unique that there is an active market with shared similar characteristics, which is valid for brands, but also for football players. And although we've never had a separate priority in our common enforcement priorities on intangibles, we've always highlighted intangible related aspects in our statement. So, for instance, in 2021, we highlighted how to consider, climate change and revising the expected useful life of intangibles, or the application of impairment requirements to intangibles, which we tackled in several years in our common enforcement priorities and lately in this year's statement. We also addressed the useful life of assets in a report that we published in 2023, which was called The Heat is On, which was a report that tried to establish and demonstrate that it was possible to establish connectivity between the sustainability statements and the financial statements, and it included examples of such disclosures. We also, back in 2014, so that was quite a while ago, we did publish also a report on the intangibles that are identified in the context of business combinations. And there's a long list which I'll spare you here. So what we do note is that much of the information about intangible assets is provided in the narrative sections of the annual report, so the management commentary. And most of that information is qualitative and focuses on descriptions of the main existing and potential product lines. And generally that's information's not that much in our focus, because our focus is more the financial statements. So therefore, mainly we see recognized intangible assets in relation to business combinations as well. But we think that better connectivity would be indeed helpful between whether it's a sustainability report, management report, and the financial statements. We also often see that companies provide quantitative financial measures with adjustments related to intangible assets and their monetization, such as EBITDA and free cash flow. And for those qualify then as alternative performance measures, and entities follow our guidelines to provide the transparency on the use of these APMs, which is important. And obviously with the entry into force of IFRS 18, there'll be some adjustments there. And we also note that analysts and banking regulators often exclude goodwill and intangible assets from their analysis for capital and prudential requirements, as it's difficult to ascertain their fair value. So where does that lead us in terms of recommendations and actions? As I said, it's an old standard. It's in need for review. It predates the revised conceptual framework, which has changed also the definition of an asset. So it would be good to look into that. But also there's a need to consider some new types of intangibles. And one important remark from our perspective is that, financial markets are about trust, and the trust needs to be preserved in that exercise of having a look at the intangible standards. So while recognition criteria of intangibles may need to be revised to take into account some new types of intangibles, the financial statements for us still need to be rooted in measurable and quantifiable principles and assumptions. So we'd want to avoid also financial statements from losing their relevance because of everyone making adjustments to the figures. At the same time, we also note that the conceptual framework explicitly states that general financial purpose reports are not designed to show the value of a reporting entity. So there's a balance that needs to be found, and certainly some things can be done, but we're never going to be reaching that market value. Also, financial statements are generally, backward looking. They're based on actual transaction. They need to be auditable, and they need to connect with sustainable and social information. So in the IASB's third agenda consultation back in 2021, we had proposed that there be a comprehensive review of IAS 38, and I think EFRAG proposed that similarly, and particularly with a focus on accounting for pollutant pricing mechanisms and crypto assets. And improving of disclosures about intangibles that are not recognized as assets. So whether we bring new intangibles on the balance sheet or not, there will still remain some that are not there. So how can we provide more and better information on those intangibles? And we do acknowledge that a comprehensive review of the standard might be a bit of a large project, maybe a bit ambitious. So our suggestion was to start with pollutant pricing mechanisms and then go on to crypto assets. Now, because for the moment there's been nothing on pollutant pricing mechanisms, we did publish a statement in 2024 called Clearing the Smog, where we basically were recounting the main accounting principles that we've noticed in relation to pollutant pricing mechanisms, and we're recommending not a specific accounting method, but adequate disclosure, so as to ensure decision usefulness for users and some form of comparability. Now, going forward, apart from discussing with the IASB and EFRAG, what we're looking into is next year carrying out a study on intangible assets, making use of ESEF data, so the digital reporting data, which enables us to pass through a very large set of companies combined with AI and natural language processing tools. And maybe just to give you a little flavor, we did a little bit of that on a topic that the IASB's looking into, which is the cloud computing arrangements. And so we passed through the statements of 1,800 issuers across 21 EU countries, and we're able, therefore, to now narrow down to 42 issuers, 4 of those being suppliers of cloud computing. Funnily enough, they were mostly located in the Nordic countries. 14 were in Finland, which we thought was possibly related to a publication that the FinFSA did following the IFRS IC's agenda decision, and which highlighted in particular that the control requirement was often not met in practice, and therefore there would be no asset recognition in those cases. But we were able to identify that there would possibly be some divergence in application. So the scope of that study that we're going to be doing next year is not completely set, but given, I think, the possibilities that we have now through digital reporting, I think we can look at a rather broad scope and hope that that will support the ISP's project. So maybe a final point on our views. There's a need to address intangible assets held for investments, such as crypto assets and carbon credits. There's a need to address application issues related to newer types of intangible assets and new ways of using them, cloud computing, agile software development, etc. There are aspects in terms of presentation and disclosure that can be done where there could be more disaggregated information about expenses and better information about unrecognized intangible assets. And the robustness of the recognition of requirements could be reviewed and possibly improved, for instance, in the context of research versus development costs. We're not necessarily supportive of exploring more recognition of intangible assets because the control is difficult to assess. And therefore, we're much more supportive of better information so that those critical intangible assets to business value are somehow explained and known. And then the last point is to focus on the user needs to identify more forward-looking metrics about understanding the business model and how intangible investments feed into future growth and how hidden value is managed. So therefore, also reliance on disclosures potentially outside the financial statements. And that's where we are. Thank you very much for your attention.
Thank you, Isabel. Thank you so much. Well, some work has been done. I mean, very large amount of work over the years, Isabel. Thank you for giving us a very effective overview of what you're doing. And thank you also for participating in the book, the handbook on intangibles as ESMA. So thank you for all this. Maybe we come back to you with some questions from the floor, if you can stay a few minutes. And it's a real pleasure now to pass on the word to the Chief Accountant of Financial Services Authority of Japan, Kura Mochi-san.
Thank you.
And thank you very much for sharing with us, all the activities that, in particular, human capital that your agency is doing at the moment. Thank you for being with us.
Thank you very much. So, Stefano, thank you very much. So my name is Koichiro Kuramochi. I came from the Japanese securities regulator, FSA. So I'm talking about human capital disclosure. So this is outside of the financial statements. So we are a bit more open about the initiative. So some years ago, I was talking with a prominent investor in Japan. And we talked about human capital. And he said, you know what? Many human capital disclosures are useless. I was shocked because I was the policymaker setting the human capital requirements. And he continued, having said that, certain types of the human capital disclosures are really useful because it can provide value creation type information and intangible information. So that's the discussion I'd like to talk about here. And what is the defining factor about useful, like human capital disclosure, or useless human capital disclosure? So that kind of things I'd like to talk about here. So let me start from the human capital disclosure developments in Japan. 3 years ago, we issued some guidance on the human capital disclosure. So this is from the first page. So this can give you some kind of like context of the guidance. First bullet point and second bullet point, nobody disagree from this room because it says intangibles have been source of the competitive advantage and driving force for corporate value creation. And second bullet point is saying that one of the core elements of intangibles is investments in human capital. And the third bullet point is the unique aspect. Many investors expect management to explain company's human capital management strategy. So what does it mean? So that's the focus of today's discussion. So what's happening in Japan is that, so I would say, positive cycle. On the top circle, we set certain requirements and guidance, as well as some educational materials. And then it triggers better corporate disclosure about human capital. Then investor can use such kind of new types of information, and investors are telling us they are advancing their investment decision making. And also investors give us a lot of feedback, and we update our educational material. So that kind of cycle is going on right now. And a little bit more precisely, so fiscal year ending March 2023, we issued the guidance. And the second box, so what is the better communication? So basically, what we heard is that there is a better communication between preparers and the investors, coming back to Paul's point about communication, particularly on the corporate value creation. So one of the context is that on the top box, so for some reason, many Japanese companies have been issuing integrated report. So they're accustomed to focusing on this kind of area. And the human capital disclosure is linked to that kind of like disclosure. And the bottom box on the right side says, why investors are looking at this kind of information? So investors are telling us, investors often use human capital disclosure in their investment decisions when assessing the feasibility of entities' business strategies. So let me give you a little bit more like specific discussion about our guidance. Our guidance is very lengthy, 50 pages for the main document and 150 pages for the appendix. But I would say the core concept is this like simple. So focus is on the human capital management strategy on the like middle box. But the important thing is this human capital management strategy should be like linked to the corporate business model as well as strategy. And also, companies are disclosing metrics and targets, but what investors are telling us is that like certain types of human capital disclosure is really just focusing on disclosing metrics. So disclosure for the sake of disclosure, and that is not helpful. However, if the metrics is linked to the company's human capital management strategy, it can give you very important information. So let me give you one example. If one company, that company is car manufacturing company, and right now they're making a combustible engine car. However, the company's strategy is moving to electric vehicle. In order to achieve that, they have to change the human resources. So right now, a lot of mechanics. However, they need a lot more software engineers to produce electric vehicle. So in order to achieve their corporate strategy, they have to have a very specific human capital management strategy. And they have to track the progress by using a KPI. So that kind of things I'm talking about here. And having said these kind of things, you may think, okay, interesting developments in Japan. However, it may not be related to you because it's in Japan, Far East country. But there is a good news. for some reason, this discussion will directly link to your activity because now the International Sustainability Standards Setter, ISSB, is embarking on the Human Capital Project. And what I believe is that what I mentioned so far is really consistent on the concept of the ISSB's framework. So let me tell you why I think so. So a little bit addition, 2 boxes in the middle. So what I mentioned was like 3 boxes here in Japanese guidance. And I think if we look at the ISSB's framework, maybe we need to add 2 more boxes. Dependency impacts on human capital, as well as human capital risk and opportunity. What does it mean? So let me give you one example here. And this description is coming from the description already in the S1 standard. So this is Appendix B, paragraph B1 through B3 of the ISSB standard. And if you take a look at paragraph B3, there is an example about human capital. So one particular company is operating in a highly competitive market and require highly specialized workforce. And in order to secure that human capital in the green letters, so the entity is investing in employee training, well-being, level of employee satisfaction, such kind of things. So if you are familiar with the integrated framework, this is very familiar. So this is really coming from the integrated framework because the ISSB acquired the integrated reporting organization. So that is why the value creation of aspect of the human capital is a little bit embedded already in the S1. And hopefully, if the ISSB develop the human capital guidance or human capital standard, maybe the discussion will be extension of this kind of area. So, and I made a little bit diagram from the description in the paragraph B1 through B3. So, starting from the business model and strategy, and every company have different business model or strategy. It is unique by different entity. However, every company have employees. Every company rely on human capital. So the dependency of the human capital is different, however, prevalent. So in this particular case, so entities relying on or depending on human capital, workforce necessary for the business model or strategy. And in order to secure that human capital, the entity have the human capital management strategy, and based on that, they do some particular investment in employee training, investing in employee well-being, so to keep the employee, so to keep the employee satisfaction, so that kind of things to keep the necessary employee to achieve the business strategy. So that's what I'm talking about here. And S1 standard is also thinking about risks and opportunity, and risks and opportunities coming from the unique business model of the entity. So that's why I think that, so we have a hope. Chances are the ISSB's human capital discussion can go into this kind of value creation area. And I think this is a great hope. So chances are the international standards can incorporate this kind of area. So stay tuned how the ISSB develops the work. And now, let me give you a specific example of the disclosure. So far, I just talked about conceptual thing. And you might think, okay, that sounds good, but is there any real example? So let me give you one company's example. The company is a Japanese company called Denso. So, and in terms of their business model strategy, that is very similar to what I mentioned. So they are moving to like electric vehicle type new business field. So they are focusing on transforming their business portfolio. So their revenue source in their plan will be completely changed. So that's their business model or strategy. And then their human capital management strategy, which is human resource portfolio transformation. So they are saying that they're going to completely change their human resource portfolio to achieve the business strategy. And then the human capital matrix and target is directly linked to their human capital management strategy, which is the composition of the workforce is the key matrix in their disclosure. So 15 years ago, FY 2011, so the mechanics is the largest composition of the employees, and the software engineer is a very small portion. FY 2025, the software engineer already doubled, and the mechanics engineers are shrinking. And their goal is FY 2031 target. So the software engineer become almost like 45% of the employees, and the mechanics become 1/3 of the, compared with the 2011. So they are setting a KPI which is really consistent with the human capital management strategy, and the human capital management strategy is linked to the business model strategy. So let me wrap up the discussion here. In Japan, we are initiating human capital disclosure. So we are mandating human capital disclosure. And right now, we are revising the human capital guidance so to even enhance the corporate disclosures. We are in the middle of the way, so still we have to work hard, but we hope chances are value creation type disclosure can be achievable through the sustainability disclosure, human capital disclosure. So that's my topic. Back to you, Stefano.
Thank you very much. Thank you very much for your great presentation, Kuramochi-san. It's so comforting to hear that in Japan there's such important development, and also S1, the ISSB, the Sustainability Standards Board, taking basically the same route. And I think it's really interesting to know. We have really 2-3 minutes for final sort of questions and comments. Any particular curiosity? No. You spoke already too much. So, Fiona, just being.
Just very quickly, in relation to human capital, are you also involved in the work of the Task Force for Inequality and Social-Related Financial Disclosures, so the TISFD, which is providing sort of broader contextual work on this space?
Thank you. We are aware of the TISFD initiative, and I'd say TISFD's focus is more broader, so inequality in society, that kind of things. But in our country, we are really focusing on financial materiality. What is the value-relevant information to investor? So our focus is narrow, focusing on value creation, so that area. Thanks.
I have a curiosity. Isabel, you still online? Isabel, maybe? No, just because...
Yes, I'm still online.
Thank you, Isabel. Just in closing, maybe some comments from your side. Kuramochi-san presentation that I hope that you heard, there's lots of reliance on integrated reporting. And we all know that in Japan, integrated reporting is a very diffused form of reporting, which goes beyond, of course, financial statements. Do you think that ESMA can have a look in the future more into also integrate? You have a lot on your plate, so I don't want to make it more difficult. But considering where we're heading to, intangibles, human capital, there's the flavor, the general wind. Do you think integrated reporting could be an interesting element to consider for the future, also by ESMA?
So we're certainly aware of integrated reporting and of issuers wanting to use it, definitely. I think we need to have a little bit more stability in at least the sustainability framework also to see how that could pan out. It wouldn't be for ESMA to mandate anything because any integrated reporting would have to come through a legislative process. Therefore, I would turn to Joanna and the European Commission for that. But I think it's aspects that we do look into and consider. So we'll have to see over time what can be done in this sphere.
Okay, let's on this positive note, you didn't say no, you said let's see how it goes also with the European Commission. I think we need to close this important session. Thank you very much for your contribution. And now let's move to corporates. What do the corporates have to say? Thank you very much, Koichiro-san. Thank you very much, Joanna. Thank you very much, Isabel. Great to have you here.
Thank you, and I'll leave you now. Thank you. Bye-bye.
Thank you very much. Bye-bye.